I'm not an expert, a financial analyst, a broker, or an economist, but I am an investor and manage my portfolio. I've made investments across different asset classes, and I like to stay on top of what's happening around me. So here is my take on 2022. And yes, I'm also just another YouTuber sharing my 2 cents. Hey guys, welcome to Think Finance and Happy New Year. As 2021 rolls out, I wanted to thank you guys for tuning in, subscribing, and sharing wisdom. Believe it or not, some of the best ideas for me has come from you guys, your comments, and all the healthy debates down below. As 2022 rolls in, I will continue to throw ideas out there, and hopefully we all can learn a thing or two from each other. I'm going to make 2 videos. In this video, I'll talk about how I see 2022 shaping up and summarize my research on investment opportunities and opinions from experts out there. Basically, highlight some of the trends for 2022. In the next video, I'll share my investment strategy for 2022 and beyond, where I'm invested and changes I'm making. I'll also share my portfolio performance. And yes, if 2020 was epic, 2021 was beyond epic. Of course, everyone is a genius when stocks are up, but my portfolio, as some would say, is non-conventional and requires constant nurturing. More on that in my next video. So subscribe and stay tuned. Let's rewind 2021. Just when we thought we have our hands around the virus and we can dump those smelly masks, a variant hit us. Then another, and looks like masks will stay around for just a little bit longer. But that didn't stop the US consumer from blowing their hard-earned money. Consumer spending drives 70% of the overall GDP. Apparently, holiday sales were up 8.5%. With all that demand, limited supply, and crazy amount of money to blow, inflation shot up at its fastest pace since 1982. It became a real deal, forcing the Fed to change its tone. Apparently, persistent is now the new transitory. Meme stock mania continues but is trending down as the reality kicks in. Spec tsunami paused as investors realized it rewarded the sponsors handsomely but came with immense speculation and limited upside for the little guys like us. Bitcoin and Ethereum made new highs, then gave back 50% and now somewhat stabilizing for the next leg up. Bitcoin never even got close to 100K, but is still up more than 55% for the year. Ethereum raised to 400% and Shiba Inu had its moment. Apparently, NFTs are here to stay, at least for now. In 2021, NFTs saw a notable rise, but investors continue to be divided. From CryptoPunks to First 5,000 Days to Taco Bell and Pizza Hut, it found its groove. Digital world is the future. At least, that is what Mark Zuckerberg wants us to believe. He introduced this vision and packaged it into one of the most hyped terms for 2021, the Metaverse. No one is bigger than the state. China cracked down some of the largest companies in the tech and education space. Alibaba, Didi, Tencent, and others are under immense scrutiny. But here in the US, everything was great because the stock market was up more than 25%. Again, what can go wrong, right? A lot. Ask Cathie Wood, CEO of ARK Invest. Her ETFs are down big for 2021. Year to date, ARK is down more than 20%. It was another strange year, but let's focus on 2022. Chances are I'll be totally off or totally right. That's not the point. When we manage our own money, it pays to research where the world is heading. Here is a summary of my research and due diligence. Overall, from a business cycle perspective, we are in recovery and expansion phase. Most analysts believe GDP will grow by 4 to 5%. High inflation should persist at least in the first half of the year. There are two ways to think about this: temporary and sticky inflation. High prices in food, energy, and cars are more temporary. As supply chain issues get curbed, inflation in this category will get under control. Sticky inflation is tied to rent, insurance, or medical expenses. This is something we should worry about in 2022. Interest rates will make headlines. Apparently, economy is too hot. Most believe that there is 80% chance that the Fed will start raising interest rates by the middle of 2022 and 87% chance of more than one rate hikes by the end of the year. Why should you care? Markets don't like uncertainty. With markets entering 2022 at all-time highs, rate discussions will spark volatility. Given where we are, I would be surprised if we don't see a 5 to 10% drawdown. Mark Zuckerberg wants us to believe Metaverse is the next evolution of the internet and how we interact socially. Our entire day will be in these virtual experiences. Work, play, meet friends, shop, go dancing, and everything you can imagine. It's not just Facebook or Meta platforms, but other companies like Roblox and Nvidia are building their own version of the Metaverse. The hype will continue into 2022 as companies try to figure out how to play this space. There are more than one ways to play the hype. More in this video and in my upcoming video where I talk about where I am invested. As dollar value weakens and inflation peaks, cryptocurrencies are gaining mainstream momentum. Despite the naysayers, cryptocurrencies are in good health. While most are incredibly volatile, the adoption rate has been steady. As the world realizes the power of blockchain, adoption is trending north. Number of digital wallets is growing consistently, and notable institutions continue to back major cryptos like Bitcoin and Ethereum. In 2021, both Bitcoin and Ethereum made new highs before giving some up. Feels like these two are forming some sort of a base for the next leg up in 2022. With the rise of decentralized finance apps or DeFi, Metaverse, NFTs, virtual worlds, adoption by institutions and celebrities, cryptos will see the next push higher. We will also see regulators come after this. You can play this via ETFs or via companies invested in crypto, or just go pure play. In my opinion, not all cryptos are worth your money. Select wisely. More on this in my next video. When you think digital, it is easy to focus on big tech and semis titans. In this post-pandemic, work-from-anywhere world, companies in every industry has embraced going digital. These companies are investing in technologies to modernize their businesses through automation, online experiences, payment solutions, machine learning, and artificial intelligence. Apparently, global spending on digital transformation is expected to hit $2.8 trillion by 2025. For example, companies like Home Depot, Target, and Walmart made huge investments in reaching their customers via digital channels, building experiences to make contactless shopping effortless. Chipotle's strategy to go all out digital worked wonders for the company. By digitizing their ordering and delivery processes, Chipotle was one of those restaurants that thrived in the pandemic. Or how about Tesla using artificial intelligence as they build a solution for full self-driving? In 2022, this trend will continue and companies enabling the transformation will do fine. Think companies in the business of cloud computing, ServiceNow, Amazon, Microsoft, semis, NVIDIA, AMD, cybersecurity, CrowdStrike, Fortinet, digital services, DocuSign, Zoom, and payments, PayPal and Square. As you think about the metaverse, digitizing businesses, and blockchain and crypto, the need to invest in cloud will grow, which means the need to invest in cybersecurity will be on top of every CIO's list. Every other week, we hear about a security breach or a widespread cyber attack. Not just for 2022, but this theme is going to dominate for a while. The global cybersecurity market is projected to hit $330 billion by 2027. This space is crowded, and you should focus on leaders like CrowdStrike, Fortinet, Palo Alto, and others. Get this, more than 200 global organizations have committed to achieving net zero carbon by 2040 or sooner. President Biden has a goal of decarbonizing the energy grid by 2035. As an investor, this means opportunity. Think clean technologies such as carbon capture, solar and wind, battery storage, renewable energy sources, and energy efficiency. Again, there are several ways to play this. Invest in companies that are committed to ESG, Microsoft, NVIDIA, green energy players like NextEra Energy, wind power, Vestas Wind, solar, First Solar, hydrogen, Plug Power, battery, Panasonic, and EVs, Tesla and Ford. There are also a bunch of ETFs that basket most of these names. ESG again is not a story for 2022 alone, but a theme that will last for the next decade or so. Sustainability is also a favorite investment area for Tiger 21 members. Let's talk EVs a bit more. At some point, the world will agree EVs are the future, and Tesla is leading the way. With rising oil prices and cost efficiency on battery production, EV ownership is on a rise. You cannot get a new Tesla unless you're ready to wait 6 months. Demand for Ford's new F-150 Lightning is so huge that Ford actually stopped taking new orders. For 2022, Tesla will continue to lead the way, but we will see competition heat up. Ford, GM, Mercedes, Rivian, Lucid Motors, and others will go mainstream. Good times. There are several ways to play EV mania. You can go pure play by investing in names like Tesla and Ford, or by investing in semi-titans like NVIDIA and AMD. Maybe companies that support the charging network, ChargePoint, or by investing in platform providers like Microsoft and Google. Real estate was hot for 2021. This trend will continue. Naysayers argue that interest rate hike will put a brake, but with limited supply, rising wages, healthy job market, and a recovering economy, think twice before you bet against real estate. If physical real estate is not for you, consider adding some REIT or real estate investment trust in your portfolio. Simon Property Group, Crown Castle, and Realty Income Corp are notable names to own. ETF VNQ is an easy way to get some REIT exposure. Real estate is another area Tiger 21 members love. In a year when S&P was up more than 25%, ARK Invest ETFs are down more than 20%. Cathie Stocks are in the right businesses that are expected to solve future problems. In 2021, valuation was questioned and a lot of these stocks came back huge. Also, with all the talk about the interest rate hike, investors moved more into traditional tech. My bet is for 2022, hypergrowth companies will come back with a bang. but I would wait till we see some positive price action. I think once the interest rate talk mellows down and we see the first hike, that might be the time. I sold my entire stake in ARK in summer 2021, and I'm closely waiting for some positive price action. More on this in my next video. XLV, the healthcare ETF, is at all-time high and is one of the best performing sectors for 2021. For 2022, this may continue, but I'm neutral. Companies in this space took charge and delivered vaccines. Big reason why stocks like Moderna and Pfizer are up big. And it looks like we are just not done yet with the pandemic. Governments and companies across the world remain committed to this space, which will drive more research and development, investment, and value for healthcare. There's a difference between big tech, pharma, XLV, and biotech, IBB. Biotech has not done much, but there's always this opportunity to innovate and come up with something groundbreaking. This is an area where Cathie Wood's ARKG is heavily invested. Energy had a blowout 2021. Most smart people agree that this will continue into 2022. As global economies recover, energy consumption is expected to rise in 2022 by 2.2%. Oil shortage and strong demand will support high prices. Economics. XLE and companies within the CTF is a way to play this space. Another space I'm watching closely. These are my thoughts. In the next video, I'll talk more about where I'm invested and changes I'm making based on some of these trends. Thoughts, comments? Happy New Year, and I will see you in 2022. Peace.